The Fed has gone through a few rate hikes now, and I think one thing quite remarkable is how well markets have taken the rate hikes. Equity markets are near all-time highs, volatility is near 23-year lows at this point. We have seen rates go up 100 basis points from the bottom, the long-end rates, and yet the markets have taken it all well. I think the next big challenge for the Fed is how to communicate well this normalization of the balance sheet. Our opinion, I think we'll start to see a lot more discussion around this, probably even in the minutes for this meeting which has just happened, and certainly probably by the June FOMC. I think they really get around to communicating the unwind probably only towards the later part of this year. We suspect the unwind itself will start in January of 2018, probably calibrated, maybe sort of 25% at a time. By end of 2018, they would have effectively gone to 0% reinvestment.
That's fast, isn't it?
I think there is a fair bit of debate on this, but certainly a point of view that would probably be easiest to communicate if it happens in a simplistic and well-announced, well-calibrated fashion.
12-month period.
So you expect, what, 40 billion a month for the next 2 to 3 years before 4.5 trillion gets unwound?
So, for example, 2018, there's about slightly over 400 billion of treasuries which are coming due. In total, over the next 3 years, about $1 trillion. Mostly of treasuries coming due, a little bit of the mortgage securities coming due. So I would think, depending upon what path they take, there'd probably be that scale of unwind. I think we'll get to a complete sort of 0% reinvestment by the end of 2018.
So if that happens, where do you think the dollar and the treasury yields are likely to move towards, actually?
So, I mean, obviously, there are multiple dynamics playing into the dollar and into treasury yields. But to our mind, and I guess one big question is whether, and the pace at which they unwind, whether that influences the pace at which they are actually tightening policy. And there is certainly some merit to the argument that the faster they're able to unwind the balance sheet, maybe they feel less inclined or less compelled to have to tighten rates quite that rapidly. Our view remains that it will be a calibrated unwind, but that the pace of tightening will still accelerate into 2018.